Welcome to Markets Now. I'm Michelle Rook with Brad Kooima, Varilek. Grain seeing some pressure this morning. The livestock futures have been two-sided. But Brad, let's talk about the cattle market first off. We obviously were impressed with last week's cash trade, and we're right up into resistance in terms of the futures. So what do you think? Can we keep going here?
Well, it would seem to me, you also failed to mention that we did have a cattle and feed report on Friday afternoon.
Yes, we did. And it wasn't a train wreck like last year, but placements were, what, 2% above expectations at 98%. So the market, do you think, is handling it well or not?
Yes, I'd say very well. And all of what you said is significant and important. But I guess I think maybe a guy needs to start a little bit with maybe with that cattle and feed report. And then, the substance of the thing is that the cash market has been so good that's been the driver here. But this report has been, I think, with the red circle on everybody's calendar feels to me like it's we've been talking about it for 2 months here. Most people would be able to, I'll show you my scar from what happened last year on the October cattle and feed report. We had from out of nowhere a giant placement number and completely turned the psychology of the whole market and started a $20 futures break. So, by the way, those cattle never really showed up much in the slaughter level either later on this year. But nevertheless, I think that there was a fair amount of fear going into that report that, oh, no, we don't want to do that again. So at least the market is handling that. Placements were slightly more than they thought, a little disappointing. In terms of the weight breakdown on the placements, they were skewed toward the bigger cattle as expected. September would largely be in the north anyway, a yearling placement month rather than a calf month. So I didn't see anything that was terribly unusual there. The thing that I was most curious about was it was a quarterly report. So we got to see a breakdown of percentage of heifers as compared to steers. And it was down slightly, not enough to make a difference, folks. Last year was the record number of heifers as a percentage of steers, which broke the record that had been set the year prior to that. So it's slightly less than the last 2 years, but certainly nothing that any analyst is going to say, oh my goodness, look at all this heifer retention that went on. So we're still not seeing it, guys. Cow slaughter, by the way, on that breeding herd topic, year-on-year difference down 17%. Yes, the cow slaughter is bigger than it was in the summer. That's seasonal, guys. It's still 17% less than what it was a year ago. So the cow slaughter is starting to slow down. And that's important to anybody that studies the grind and what drives the thing. So, yeah, cash market had a great week last week. 190 north and south. Futures are back to a discount, like you like it. So, yeah, I think the market is in a lot of ways a very healthy. Packers making some money. Producers going to make a little money here, I think, and everybody seems to be very content to take it a day at a time as it's going here.
Yeah, there was even some 192 though, I think, wasn't there, in terms of the cash trade in some places?
Maybe where they have to pay the freight or something. Yeah, I wish I could confirm that was the real deal. I know 190 was widespread, but and I know there was a little dab of 191 as well, but I'm not sure. The 192 might have had a freight or a shrink deal on it. But anyway,
so do you think we can continue to advance the cash market this week or not?
I do. I think you got a packer that is making some money. And greed is a thing that still works, right? So I think you got a packer that's willing to take on some cattle, and especially across the north, less than expected supply of cattle in the north that still is current. The weight issue, while it's above a year ago, the weight issue is not created because of this area. It's because of Texas and Kansas. Now, and I think that's driven largely by these people are mostly formula traders. So the packer says, I need to have more meat, so we're going to make them bigger because there's not enough supply of cattle. They still have to buy them one at a time. Don't forget. Now, last week's data on the grading showed that, especially in Texas, the grade came down way down. I'm hoping that's a harbinger that maybe we're going to see the weights come down this week or next. We shall see. I'm puzzled a little bit by the weights. I'm not going to lie. But with the grade showing that big decline, I'm optimistic that maybe that shows that there's less days on feed on those cattle as well.
And we have got the McDonald's story behind us now. The Restaurant came out and said we do not have E. coli in the beef, and they're going to put quarter pounders back on the menu. We did handle that pretty well, though, that news, don't you think?
Oh, Michelle, great point. Really great point. I'm sorry I forgot it. Another time, another weak characteristically market WIDA, that would have been a bad deal. I'm really, really glad that it didn't come out while the session was open, because I feel, and now maybe you can argue with me, but I feel there's these headline algorithms, I call them, that react to certain word phrases, whether they makes any sense to the real market or not, but they react to them, and all of a sudden you're 200 lower and you're trying to regroup and wondering what's going on. So I think it was helpful that it came out when the session wasn't open, and I thought the market did a good job of absorbing the news and saying, hey, you know what, it's the onions, right? And moving on down the road. So no, good point. I thought I was kind of happy that the market handled it as well as it did.
No doubt. So the hog market has been, as you and I have talked many times, outperforming the fundamentals. But do you think this market is getting close to a top? Are the funds done buying here? Has it been all fund driven?
Well, funds are a big part of this thing. We got open interest at a level, I should have looked it up here, 137 or 138,000. Never been anywhere near this big in 1 month. And the funds are longer than in my memory, and maybe in anybody else's. It's there's that old saying, I mean, you for every buyer there's a seller, right? So as you approach the first week of November, you're going to have the biggest fund roll that you've ever had for December hogs. Now, how is that going to happen without making a bit of a difference? The problem is, or whatever you want to call it, the difficulty in the analytics of it is, it feels to me like largely it's the hedgers that are short and the funds that are long. Well, I can tell you who's got a thicker wallet on that deal, and the funds, I would rather, let's face it, you'd rather be on their side than against it. But with this kind of open interest, with this kind of record position, and this overbought market like we've had here, one would think that we'd be close to getting a quite a severe correction, actually. But there is some fundamental issue here, Michelle. I mean, we had a weight breakdown on the last report that suggested we were going to be killing 2 or 3% more right now, and we're not. We're killing like 3% less. So, those kind of curveballs do disrupt the market for sure. But it's been quite a run with big open interest. You would think certainly as they start to come out of it, which they have to at some point, it's going to create a pretty good correction.
Yeah. And the grains down this morning. We've had good demand lately, especially for corn, even more flash sales this morning. But not only have we hit technical resistance, but you do have crude oil down pretty sharply this morning, and South Americans' weather looks like it's improved. So is that, going to put a intermediate top in this market, or do you see a lot of downside risk?
You've done a nice job of outlining it. To me, I have a hard time having the same comment for soybeans that I do for corn.
True.
I can come up with a pretty good case for corn, demand driven, that the lows are in, maybe not go anywhere, but we're done going down, we're going to grind higher. Here and there, I can see some the basis levels here just east of me starting to ready to firm up quite a bit. So you're getting into that post-harvest, the structure of a market that you expect is going to gain a little bit. We're at full carry back here, right? So I can make a decent case that maybe the corn can try to grind a little bit higher. I'm not talking $5 or anything like that. I'm trying to, let's get off of our low area here and try to put on 20, 25 cents and see what we do. Beans, on the other hand, is a struggle. If we don't, now it's super early in the growing season, probably plenty early to talk about South America, but we don't have much else to talk about, so we will.
Yeah.
Still not ideal conditions, but they've improved, so now we got to wait for the next time it hasn't rained for 2 weeks, and then we'll see if we get something going. Otherwise, the beans don't have much of a story. They don't have that same supply story or demand story, rather, that the corn does. And obviously worldwide competition. So I don't know. I hope the lows hold on this bean thing. The bean thing feels heavy to me, while the corn feels like it's got a lot more bounce to it, in my opinion.
Except that if soybeans go down, you wonder if corn can stay up. So,
exactly. And the blooms off the wheat market too, so it's they're not it's not a standalone affair for sure.
Yeah, no doubt. All right. Thanks so much. Brad Kooima with Kooima Varilek. That is Markets Now.